Grand Theft Auto 6 just released their new trailer that made a record of views announcing that their long-awaited game is going to be available on May 26, 2026. So today, if you're looking for a way to invest in advance in that game that is set to be one of the best games ever made that has cost over $2 billion to produce, which is even more than the Burj Khalifa, the largest building in the world. This is what you'll be discovering in this video. It is no secret for the gamers that the studio that is responsible for the creation of GTA is Rockstar Games. In fact, this American video game producer that is located in New York isn't only responsible for GTAs, but also other well-quality games such as Red Dead Redemption. But what some of you might not know is that Rockstar Games is only a subsidiary of the parent company TTWO Interactive Software, and it is in this company that you can invest in on your side under the ticker TTWO. Excluding Rockstar Games, this business also holds other different video game producing companies such as Zynga, which is responsible for the multiple Farmvilles, as well as 2K Games that is responsible for multiple well-known sports and other games such as the NBA, the PGA, NHL, NFL, WWE, Borderlands, Civilization, Mafia, and BioShock games. Globally, it is fair to say that this is the dream company for every gamers with the big variety of games that they are offering. But today, what interests us is to know whether or not this company is interesting from a financial point of view. But before we unveil the numbers and discover whether or not it is a good stock to invest in, let's take a look at what are the most recent news that we've just learned about the new GTA 6. This game has actually been under development over the past 12 years since the release of the latest GTA 5 that has been released at the end of 2013. At that time, GTA 5 came out as one of the best-selling games ever with over 200 billion copies sold for some total sales revenue exceeding $8.5 billion. For comparison, when it comes to another popular game that has been sold by Rockstar Games, which is called Red Dead Redemption 2, a fan favorite, this game has been sold over 70 million times for a total revenue exceeding $400 million. And so GTA 5 has been a total hit, and it is why everyone has such high expectations when it comes to their new Grand Theft Auto game. With a trailer that exceeds 100 million views in less than a week that is showing part of a game with incredible graphics, a map bigger than what it used to be, and an incredible storytelling, many people expect GTA 6 to be one of the best games ever made. It is no secret when we know that it will have taken them more than 13 years to develop and sell the game, and it would have cost them over $2 billion to produce it. Back in the day, GTA 5 came out with an initial selling price of $60 for the standard edition on most platforms back in 2013, which helped them to make over $1 billion of revenue during the first 3 days. However, with inflation and the cost of games that is becoming more and more expensive, the most likely price tag for the new GTA 6 is expected to be at least $80 by itself, or $100 with some digital freebies that would carry a label of some sort of special edition. Now, when we look at the numbers of sales that are projected for the first year of the game coming out, it is expected to be at least 40 million of copies that would be sold. This means that with an average price per game sold of $80, this would make a grand total for the first year of $3 billion of revenue, which would actually be more than enough to cover and pay all the different expenses related to the production and the sales of this game. So now that you understand what are the financial costs and expectations when it comes to the new GTA 6, let's take a look at the value of the parent company TTWO Interactive Software to see whether or not it is a good stock to buy right now. In terms of the valuation of TTWO Interactive Software, we can see that over the past year and a half, the valuation has been surging massively, where at the end of 2023, it was worth about $27 billion, and it is currently worth about $40 billion, or an increase of about 50%. Unfortunately, since the current earnings of this company are negative, we don't have access to any positive trailing price to earnings ratio. But when we look at the forward P ratio based on the future forecast earnings per share, we can notice that with a forward PE of over 29, this company would be quite overvalued on that regard. And this is also confirmed by some pretty high price to sales and price to book ratios of about 7 right now. However, by far the biggest con of this company right now is their poor profitability, where we can see that they currently have a profit margin of less 67%, add with some operating margin of less 7.89% and some super poor return on equity over the past 12 months of less 51%. During that same period, we can see that TTWO has been able to generate some revenue of about 5.45 billion with some slight decrease in their quarterly revenue growth lately. And unfortunately for them, we can see that they currently have about 4 times more debt, about $4 billion compared to their current cash position of only $1.21 billion, which makes that their total debt to equity ratio is of about 72%, which would be indicating that the company is quite dependent on a potential fluctuation of the interest rate. But to end on a high note, when we take a look at the volatility of the company that is represented by the beta on a 5 years period, we can see that with a beta of about 1.09, this company will tend to fluctuate about the same as the overall market. But the positive news regarding this company, as I mentioned, is the fact that over the past 52 weeks, we can see that it has been gaining over 54% of value, while on its side, the market has only been gaining about 8% of valuation. As you've been able to see in this video, it is possible for you right now to invest directly into the company that is producing the new GTA 6 as well as many other different games. Even if this game is highly anticipated by many gamers all across the globe and that it should be making a lot of money out of itself, we can see that at the moment, from a financial point of view, the parent company Take-Two Interactive Software might not be your best investment option. Obviously, the companies expect to make a lot of money over the next year with the coming out of GTA 6, but at the moment, it is far from being profitable. And additionally, the stock is trading currently at some pretty high ratios, meaning that it would potentially be quite overvalued because of the high expectations that people have for GTA 6. Even if the game has all the characteristics to be a top hit for the next decade, meaning that it would be able to generate a lot of revenue and at the same time a lot of profit, it is also quite important to understand that not everyone is playing video games, meaning that the video games producers won't be able to sell 7 billion copies. Also, the video game sector is quite cyclical, meaning that it comes by cycles depending on the economy and depending obviously on when the video games are coming out, meaning at the same time that it tends to have a lot of volatility, where we can see that over the past year, this company has gained over 50% of value, and the cyclical nature of this business makes that at the moment it isn't a business in which I am looking to invest in. But now on your side, if you're looking for other companies in which you can invest in right now for the rest of 2025, well, check out the video that's gonna be right over here, and I will see you soon. Peace.